For more on Greece, let's bring in Marc Faber. He's the publisher of the Gloom, Boom, and Doom report. He joins us now by phone from Thailand. Marc, thank you for joining us bright and early in the United States here. You've been following this. What do you make of the latest news coming out of Greece and this deal potentially getting done, although I'll note that Parliament still has to pass it?
Yes, as you've heard, the deal is proposed and has to be passed by Parliament in Greece.
Right.
But basically, we can assume that it will be passed. Now, the question is, does it solve any of Greece's problems? And the answer, in my view, is no, because what Greece needs is a significant debt haircut. The IMF suggests it's 30%. My view is that at least 50% debt cut would be necessary to essentially allow Greece to grow, because with the current debt level, that will actually now increase. Don't forget that. And with the austerity measures, in my view, for Greece to actually grow is practically impossible. Never mind, repayment of debt is out of the question, but just to pay the interest.
So Marc, are you suggesting that we're going to be here again a few years from now, even if Parliament passes this deal?
Well, what I'm suggesting is this. The Greek deal is good for stock market investors because all the markets are up. But fundamentally, it's a very bad solution. The proper solution would have been for Greece to leave the EU, to depreciate its currency very substantially, and to default or get a debt relief of roughly 50%. That might have led to Greece becoming again a growing economy, prosperous, I doubt, but growing economy. This way, in my view, growth will be elusive.
All right, so what about the political future of Alexis Tsipras then? If you're saying this isn't enough to put Greece in a better situation down the road, and that we're only going to see this again, Alexis Tsipras promised one thing to his people, and now with this deal, he didn't really get much done. Will he stay?
Well, I think that his political future is very uncertain because he basically caved in on all the demands from the Europeans, notably from the Germans. And I doubt that the people, his party that supported him, will be very pleased with the outcome.
So stock markets around the globe are liking this news this morning. It's certainly going to be a time will tell sort of thing if this is a knee-jerk reaction globally, or if markets are just going to be concerned that we're going to face this again soon.
Well, basically what we had is a market that became oversold. People said, well, the markets are going down because of Greece.
Yeah.
I don't believe this for a minute. I believe markets went down because it's becoming evident that the Chinese economy is not growing anymore. My forecast was that it would be growing at around 4%.
Yeah.
But if you look at car sales, they were now down in June. This is the first downturn in a very long time. With the stock market now weak, I think that car sales will continue to disappoint.
Yeah.
We have a weak economy. We have had copper dropping substantially, iron ore prices dropping substantially.
Yep.
This all points to a global economy that is weakening, not strengthening.
Good point. Good point. We're going to be on China in just a little bit here, but that too, the slowdown there continues to be a big developing story, especially for the global stock markets. All right, Marc Faber, thank you for joining us on Breaking Greece News this morning.
Thank you very much for having me.